the top business stories live from the Sky News City studio. The chief executive of Lloyds Banking Group says he sees business and consumer confidence returning as the bank reports record profits. A big rise in earnings at the vending equipment company Me Group, best known for its Me photo booths. Plus, Japan parties like it's 1989 as the Nikkei overtakes the record it set 34 years ago. Good afternoon, this is Business Live with me, Ian King. The chief executive of Lloyds Banking Group has told Sky News he has seen a rise in both household and business confidence since the start of the year. Charlie Nunn was speaking as the UK's biggest provider of current accounts, savings accounts and mortgages reported a pre-tax profit for 2023 of £7.5 billion. That was up 57% on 2022 and it reflected a rise in the net interest margin, the difference between what it charges borrowers and pays depositors, as well as a big drop in the sum it sets aside to cover loans it does not now expect to be fully repaid. Lloyds also set aside £450 million to cover the cost of regulatory investigations into the historic selling of motor finance.
20% of people in the UK, of households, have had to make some significant changes to adapt to what's going on. But those that can't make ends meet is less than 1%. And actually that's stabilised or got a bit stronger in the last quarter or two. That's really important to focus on those customers. And we do still have customers coming off low-priced mortgages this year who we're very focused on supporting as well. You know, the other side of this, though, is the year has started with some confidence. We've seen the best business confidence for the start of a year since 2016. Consumer confidence is quite high, and people are looking at another few quarters of real wage growth and lowering rates and inflation. So there's some underlying strength in the economy that we're looking forward to this year.
As the UK's biggest mortgage lender, how do you assess the health of the housing market?
Actually, the first few weeks of 2024 have been encouraging. As rates have come down and mortgage rates came down over the Christmas period, we've seen strong demand for customers to remortgage and also start to look to buy a home. So very early days at the start of 2024, but it's encouraging to see that confidence around the housing market is a bit stronger.
You saw an £11.3 billion decline in retail customer deposits during the year. It looks as though a lot of that has been recycled into savings accounts. We
actually saw our overall deposits slightly increase. As you say, people were moving money out of current accounts into other savings products. And we opened 3.9 million savings accounts. And it was great to see, even in the fourth quarter, we saw an increase into our savings products of over £4 billion.
And Lloyds also announced a £2 billion share buyback. Investors love that news. The shares are currently ahead by some 6% on the session. Other business news now, and annual profits at Rolls-Royce have more than doubled on the back of an increase in defence spending around the world and the continued recovery in air travel. The aircraft engine maker and marine propulsion specialist said underlying operating profits for 2023 came in at £1.6 billion. That was up from £652 million in 2022. Rolls, which said cost reduction plans that will see it cut 2,500 jobs by the end of next year, are well underway, said its large engine orders were the highest in more than 15 years, with major orders coming in from Air India and Turkish Airlines. The shares have risen by more than 8%. The advertising and marketing giant WPP has suffered a drop in full-year earnings after a slowdown in spending by clients in the technology, healthcare and retail sectors, especially in markets such as Germany and China. WPP, which owns the J. Walter Thompson and Ogilvy and Mather agencies, said full-year pre-tax profits fell by 5% to £1.5 billion. But WPP said it was confident of raising operating margins this year, highlighting recent new assignments with clients such as Allianz, Krispy Kreme, Mondelez and Nestlé. The shares have fallen by 1.25%. And shares of Hargreaves Lansdown fell by more than 4% today after the UK's biggest wealth management platform reported a 38% drop in net new business during the final 6 months of last year. Well, the Bristol-based company was reporting a 5% fall in half-year pre-tax profits to £182.5 million due to one-off costs related to a recent restructuring. But Dan Olley, the new chief executive, noted that customer numbers had grown by 20,000 during the period, taking it to 1.82 million clients. Now, the Nikkei 225 in Japan has finally overtaken the all-time high it hit 34 years ago, and it's up 17% so far this year. But lots of other equity markets have also begun 2024 strongly. The S&P 500, America's main stock index, is up by 5% already this year, and the Pan-European Stock 600 index is up by 3%. And other asset classes also look to be thriving. The corporate bond markets have enjoyed their busiest start to a year in more than 3 decades. Well, I've been speaking with Euan Munro. He's Chief Executive of Nunn Investment Management, which has more than £100 billion under management. And I asked him why equities are still rising, even though rate cut expectations have been pared back.
I think to some extent equity markets and bond markets have been moving to maybe different stimulus. If you look at the equity market, the leadership has actually been very narrow, and the excitement has largely been in some larger tech stocks that maybe don't have the debt levels and so on that interest rates would have the major impact on.
Obviously, you've favoured traditionally an approach more towards income rather than growth. Do you worry about missing out on some of these US tech mega cap rises?
I'm a bit of an investment coward. I don't like buying things on massive multiples, and certainly if you sort of look into that growth, Nvidia produced results today, quite remarkable results, and inevitably, you know, the share price is riding high as a consequence of the continual beating of those quarterly expectations. And it's in the hottest of hot sectors. Artificial intelligence, we believe, is going to be a major impact on a variety of different sectors. The question is, you know, is it so well entrenched in people's minds that this is an exciting stock and it's sitting at a very high valuation? Is everything in the price or getting close to that situation? And I think when you're dealing with stocks on those valuations, that's a concern. We also invest in income stocks, and I think given our expectations that growth is going to be positive but not wildly exciting in terms of economic growth globally, companies that are on lower valuations, that are returning cash capital to investors, are really quite interesting at the moment. We've seen a number of them reporting recently as well.
What do you put this surge in activity in the corporate bond market down to?
Well, I suppose the resetting of interest rate expectations with interest rates, you know, the sort of the expectation of immediate cuts coming out at the end of the year. Probably a number of people were feeling that bonds were a bit optimistic in terms of their expectations. So the headline yield for people going in now to corporate bonds is a bit more attractive than it was at the start of the year. And I think as well, there's probably been a perception that the reason why interest rates have not fallen as fast or are not going to fall as fast as expected is that the economy is a bit stronger. So the possibility of corporate defaults and so on is receding into the background. So that combination of a higher, more attractive yield and less probability of a default is Goldilocks time for corporate bonds.
Now, overnight, the Nikkei in Tokyo has finally overtaken the 34-year peak it hit in 1989. We've had so many false dawns over the years with Japan and its growth prospects. Is this the real deal we're seeing now?
I think it might be. I think one of the things with Japan that's probably under the radar, people see what the topics and the Nikkei has done and making new highs. I was 19 when it made a high before. I'm 53 now. So yes, it's been a long time since we've seen these levels. But in the background, you've seen quite a depreciation in the Japanese yen. The economy, as a consequence, is much more competitive than it's ever been. And so, yes, I think Japan has a lot to offer.
Now, there's a lot of concern in London about the constant drift of companies taking their main listing to New York. We've had another one today in Divya. How worried are you about this?
Yeah, I think it is a concern, and I was recently talking to my head of UK equities on this subject, and we do need to stop the drift. I think one of the things that might be helpful is that the politics in the next 12 or 18 months are likely to be playing out elsewhere. The UK, if it does have a Labour government, it's going to have a Labour government that probably isn't going to be a radical Labour government. So the changes politically and economically in the UK are maybe not as dramatic as we might see elsewhere. And it's also a market that is undeniably cheap. So our hope is that we'll start to see people globally recognising the UK as a bit less politically risky, and an attractive market to deploy capital. But yes, there definitely needs to be a resolution. We can't afford to keep seeing large companies leaving these shores.
That was Euan Munro speaking to me a little earlier. Now, most people will know Me Group for its PhotoMe photo booths, but it's long since diversified into a wide range of instant service vending equipment, including laundry services, digital printing kiosks, children's rides, and more recently, pizza and fruit juice vending machines. Today, it reported a pre-tax profit of £67.1 million for the year to the end of October. That was a record and up 26% on the previous 12 months. Well, joining me now, I'm very pleased to say, is Serge Crasnianski, the Chief Executive of Me Group. Serge, welcome to you. Sales were up 15% during the year. How much of that came from price and how much from adding capacity?
More or less everything working well. We have a good record in our photo booths, good record in our Revolution washing machine. I would like to say that reason we have 15% increase and the profit 25% before tax, and we are more than 100 million EBITDA.
And is that down to putting prices up there, or is it volume?
The volume is more or less increased in every country. Also, especially in Japan, we just acquired now the Fuji business on the photo booth.
Now, you added 3,100 machines or so during the last 12 months. What are you targeting this year?
This year, we're targeting around on photo booths. We expect 3,000 more photo booths, 2,000 more on the washing machine, and other division, especially in food business, the connected fridge and the pizza machine are moving quite well.
How difficult is it to obtain sites?
Sorry?
How difficult is it to obtain the sites that you want?
No, it's not difficult. It's, you know, we have really very stable, very good market. And also, you must remember, we have more than 100 engineers and R&D, most in Asia and France. We have plenty of new development. Take an example on a photo booth. You can't have a dream, an example, and we give you exactly the picture of your dream, what is your dream. And also we're working on medical. You enter on the photo booth today, you can't have your almost a full checkup. We have make in test 130 customers a day coming on this photo booth with a medical. You have instant checkup.
That sounds fantastic. I was going to ask you, what are the areas next ripe for vending machines? What aren't you saying?
The next one, we're coming back 60 years ago when they invented the first automatic key machine on the business. And now we're developing a lot of range of automatic key machine where we can give to our customer the instant, 1 minute for make your key, and much cheaper than you have today. Much more, 50% less. Our obsession is give to the customer the best we can give with our machine.
So are you experimenting with 3D printing? Is that something that you might...
We don't use 3D printer. We use a special scanner. We use a special system. And you have your key in 1 minute. We intend to open in the UK a second part of the year.
Now, the fastest growing part of the business, both in terms of margins, is laundry. What's driving growth there?
Laundry, you know, it's a very exciting business. We are now, take an example, in UK, we have 1,000 installed Revolution at the end of June. In Ireland, we have now 700. In France, 4,500. And it's really, we are the biggest operator on laundry in the world.
Could you ever sell beer through a vending machine, do you think?
Sorry,
beer. Could you sell beer through?
We have one machine, make instant beer vending machine. Oh. Yeah, we have developing. We have in test, but we have that machine, yes. Can make beer, but also you can make wine and instantly.
Sounds fascinating. Now, your share price is up very strongly today on the back of the results, but I mean, it's still really not where it was 5 years ago even. Are you frustrated at the way the market...
you know, we are really underperformed. The people don't see and understanding our business. But really our business is moving up. With more than 100 engineers, we are really a very strong position for developing plenty of new product. You must remember when I starting the key business, when I have 20 years ago, I make my nuclear physics study. And we are, in the year 70, the biggest operator in key business. We're coming back, you know, it's interesting. But the business is extremely, I would like to say, resilient. We are in 15 countries, mostly where we are Japan, number one for the photo booth. After that is France, UK, Ireland, Germany. We are more or less a big country.
Yeah, and back in the FTSE 250. Serge, we have to leave it there, I'm afraid. Good to see you this afternoon. Thank you.
Thank you.
Still to come here on Business Live. We'll have a look at how the markets have done this Thursday afternoon. Stay with us.
And I'm Sky's US correspondent based here in Los Angeles.
It's turning everybody into, a crazy, violent drug addict.
How are you feeling? I am angry. Are you a hypocrite, sir? Will your candidates win?
I hope so.
I gotta be realistic. My sister's dead.
More than 4 weeks on, there's no murder weapon and no suspect. Mum, how are you feeling today?
Jeffrey said, you answer to Ghislaine, you just don't cross her.
I'm so excited.
Severe nightmares of these people coming in and just taking me in the middle of the night.
I've watched as whole towns were torn apart by natural disaster.
I'm alive and I'm thankful for that.
We take you to the heart of the stories which shape our world.
A lot of cases that I know are reported from Ukrainian missiles themselves.
Ambassador, with respect, I think that's preposterous.
Slide Emirates, slide better. Fly Emirates, fly better.
Thank you.
Welcome back. A bit of breaking news to bring you. The Scout Association and one of its employees have been referred to police by a coroner for investigation for conspiracy to pervert the course of justice following an inquest into the death of Ben Leonard, who was 16 and who died on a Scout trip in 2018. In response, the Scout Association said, "We will closely review the coroner's observations and adopt all further changes we can to do everything in our power to stop such a tragic event happening again." Well, equity markets in Europe have had a positive session dominated by plenty of corporate results. Here's how the main indices have finished in mainland Europe, all of them trading heavily to the upside. One of the big stories today is Nestlé. That's off nearly 5% in Zurich after it warned of a slowdown in sales growth this year. To the upside, the French hotels giant Accor is ahead by 2.5% in Paris after its results beat expectations. Well, here in London, the FTSE 100 has also finished up, albeit only about 1% higher in mixed trade. Rolls-Royce has added about half of those gains to the index on its own. Look at that, up 8.25% on reaction to its results today. The leading blue chip gainer in percentage terms, though, is Beazley Group, the Lloyds insurer. That's ahead by nearly 9% on news of a $300 million return of capital to shareholders. Another of the 7 FTSE 100 members reporting results today is Hikma Pharmaceuticals. That's finished up 4.25%, while the paper and packaging group Mondi is up by just over 1.75%. Outside the FTSE, a spectacular move to report there. Indivior, the drug maker, that's up 22.5% on news it's looking to move its main listing from London to New York. Over on Wall Street, well, the big story of the last 24 hours has been last night's forecast-busting results from the chip maker Nvidia. It's up 15% this afternoon and is closing in on a stock market valuation of $2 trillion. All of the main US stock indices are higher. The Nasdaq ahead now by just under 2.5%. On foreign exchange markets, well, sterling rose earlier on after the flash PMI survey data for February pointed to activity expanding at its most rapid pace for 9 months. Is more or less unchanged right now against the dollar. It's up by about 1/6% against the euro. The single currency, meanwhile, very slightly lower against the greenback. The oil price, meanwhile, is higher this afternoon on signs of a big rise in demand from US refiners. Barrel of Brent crude currently changing hands at $83.54 a barrel. That's up a little under 2/3%. Well, joining me this afternoon is Alex Stewart, Global Fixed Income Manager at Schroders. Alex, great to see you. I know you're a fixed income specialist, but yes, I've got to ask you about Nvidia. I mean, it's been the story that's set markets alight this last 24 hours.
It really has, because, I mean, all we've been hearing for the last little while is how overvalued a lot of these stocks are looking. And, you know, obviously, the bigger they get, it's harder to keep that growth going. And yet they did, you know. It was really quite astonishing.
What does, I mean, as I say, you're a fixed income specialist. You're looking at how the market perceives inflation and where interest rates are going, things like that. What impact does something like Nvidia have on any of that?
Well, it's quite interesting because it's like when you look at the equity markets, it's such a big part of them are now these stocks, and obviously they have an impact on people's wealth and growth and income and so on. And we are actually seeing a bit of a turnaround in the global economy to some extent. But I think the big questions are just how much of a game changer AI could be for such a lot of companies.
Yeah, and potentially that's disinflationary.
I mean, arguably, yes, but it's also an area where companies are going to be investing and potentially be able to see the returns on investments, which is what you really want to be seeing for economic growth. So, you know, it's got implications, obviously, for where interest rates and inflation could be going. Yeah, and also on jobs. I mean, we had earlier this week the Fed's latest minutes. What did you read into those? Well, I mean, this is the thing. It's like everybody, I think the market's got a little bit ahead of themselves in thinking that we were going to get a lot of rate cuts this year, you know, because the slowdown was kind of coming through. But, you know, we're beginning to see that kind of turning around again. And I think the Fed are just wanting to try and sort of make it clear that, you know, yes, if inflation continues to fall, they want to cut rates. But, you know, financial conditions have been loosening as a result of that. And that actually does mean that, you know, it's beginning to give an impetus to the economy. So, you know, they have to be careful to make sure that they don't let things heat up too much again.
What's it been like running a fixed income fund this year under these circumstances? I mean, interest rate expectations have completely shifted from where they were at the end of last year.
Yeah, I mean, things are moving around quite a lot, which always makes life interesting. And I think the thing is, it's like for so many years under quantitative easing, the markets were pretty much kind of going one way, or yields were very capped. And you certainly didn't see any of this move in the short end of the markets, the sort of 1 to 2 years. But actually, what expectations of when actual rate moves are going to happen is changing things around quite a lot. And that has quite an impact, particularly here in the UK, on like the fixed rate mortgage market. So.
Absolutely. I mean, Lloyds was saying today they expect 3 rate cuts this year now. Does that tally with your thinking?
I mean, that's what our economists, the kind of consensus is within us, within our team. So, yeah, but I mean, that has come down a lot. I mean, just about a month or so ago, people were looking at, 1.5%. So that's quite a change. And I think now, just with the trajectory of where growth and so on is going, the question mark is, will it even be 3 cuts this year?
Yeah, absolutely. Alex, we have to leave it there, I'm afraid. Great to see you this afternoon. Thank you.
you.
That's it from me. I'm back again at 11:30 tomorrow morning with our next edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's the News Hour with Mark Austin, with obviously all the latest developments from the House of Commons. Don't go away. Thanks for joining me today. Cheerio.
It's 5 o'clock. I'm Mark Austin. This is the News Hour.